if inflation goes up, the Fed is not going to be very likely to cut interest rates, right? What does that do to the dollar? It makes it strong relative to its peers, especially Europe, for example, where they've been cutting interest rates like crazy, right? The euro, take a look at the euro, has had a recent resurgence with all the uncertainty around US trade, but I am pretty cautious on this one. You guys know I was bullish here. I closed out because I did not, once we had that UK deal and we had China deals ahead, I said, I don't know that I'm going to mess with that. And at the same time, I also had PMI numbers come in strong for the US. So there was some economic data that supported me just saying I'm too neutral to hold euro into a weekend where we could have some chaos. And we did. I mean, good chaos, not so good for the euro dollar exchange rate. And for gold, right, those things suffered, but most risk assets performed really well. The dollar index went up, right? So my point is, with the dollar index, am I bullish or bearish? Well, guys, I'm about to tell you, if we get a really hot inflation print, we are going to be likely higher from here. And my perspective on this would probably be bullish from here. Now, again, I'm kind of neutral on the dollar at this time. You know, there's some stuff here that I like more or less on the dollar. But if I take a look, for example, at just major currency pairs, you can see that most of these currency crosses are neutral on the dollar. You know, euro dollar's getting a bullish reading, some COT data giving a boost here. GDP numbers were a miss for the US and maybe an upbeat for Europe. So there is a slight bullish, but this is only a +5. And what kind of concerns me about that reading is you have dollar yen right above it at a +6, saying to long the dollar here, be bearish the yen as a bias, right? Does that mean I go buy dollar yen? No, that's not how that works. I just look at the dollar yen with a bullish perspective. And when I do that, I say, hey, you know what? We've kind of got a price action breakout forming here. We'll see, but this price action has been very bearish for the dollar yen. And then we had the news this weekend, price pops higher. And I actually think that any pullbacks, I am more interested in yen shorts. So dollar yen, I'd be bullish on it, right? Anyways, guys, just a heads up really quick for you. I do want to just remind everybody that we are going to be dropping, well, you know what? I'll come back to this in just a second. I was going to say we'll drop our free Telegram channel link in a second, but we've got news coming out. I'll tell you more about that in a second. We're going to be doing some overhauling in the Telegram channel that I am really excited for. And I want to make sure everybody who's here is in the Telegram, and it's free to join, tons of free value. We'll drop the link and I'll talk more about that in just a second. In the meantime, we've got about 30 seconds to go until we have CPI data coming out. I have the S&P 500, the NASDAQ, the Russell, and the Dow Jones in our left-hand side. I have gold in the top for you, Bitcoin top right, dollar index is right here, and oil is in the bottom right. All right, initial reaction here. Dollar index not moving a whole lot. S&P just jumped. Let's see where we're at in terms of percentages. NASDAQ is up 0.3, S&P up 0.2. Dow Jones is fighting higher, sort of a mixed reaction. I'm just going to guess that came in as expected. So my guess is we just got 2.4, nope, 2.3 CPI month over month, and core came in soft. So we got 2.3% inflation. Interesting. So we did get a, you know, this is a positive reaction considering we were negative in the morning. But actually kind of surprised. I would have thought that we'd be up a little bit more off of a 2.3%. Maybe that is foreshadowing for later today. I don't know, but a nice CPI print. We will take that 2.3%. So that would be, going back to our discussion, that would be soft for the US dollar, right?
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
So soft for the dollar index. We would expect that to cool off a little bit here, keeping me decisively neutral on the dollar. If we had seen a hot print, I was telling you that I'd probably be looking to get bullish, but with a soft print, going to stay neutral, neither looking to long nor short. US dollar crosses at this time and still neutral on gold. Gold's reaction here, if we take a look at a 15-minute chart, is semi-muted. And I do want to just add a little bit of nuance to the conversation here today, because we have to consider, this is why, trading is, fundamentals are very important. At the end of the day, why we may not see such a big move on CPI right now is because the market simply cares way more about trade stuff, right? Is, what's next with the next trade deal? Is, the US and India going to make a deal? Or, what's going to happen in Japan and Europe with the trade, right? So that is the dominant headline right now. And I think it's always important, even if you're not a fundamental trader, you don't use economic data, I think it's really important that we make sure that even if you're purely technical, you understand what the guiding force on the fundamental side is at any given time. The guiding force of this market right now is trade, right? Trade, negotiations, who's making deals, who's not making deals, who's being problematic, and who's kind of working with the United States, etc., right? So that is what's guiding the market here. That's why when you're looking at a jobs report data point, when you're looking at an inflation data point, it's not maybe moving it as much as perhaps it was like, last year or when we were kind of watching inflation so close, waiting for rate hikes or rate cuts, right? So that's my point, is just we see a CPI print like this. Is this good news? I would say yes. In fact, I personally take great, kind of solace, if you will, positive news here in this number. Market may not be, absolutely moving crazy like this, but this is excellent news in terms of the indices, in terms of risk assets. I wouldn't be surprised if stocks continue to move higher based on this. I wouldn't be surprised if Bitcoin continues to move higher on this. Gold may have a little bit of stabilizing here at these levels with cooling inflation. I don't necessarily think gold is super bullish at this time, but maybe just neutral on gold. We take a look at NASDAQ. Again, this may continue to help us fuel through some of these levels. However, we're stretched here. I'm not going to say otherwise. I think that I'm not bearish on the NASDAQ or S&P 500, but I do think a retest of support is completely normal. People will freak out. They say, oh my gosh, we're going back down. I think you need probably some healthy pullbacks within the context of this uptrend we've been seeing.
This is why markets are tricky, guys. We had a higher than expected CPI print. Regardless, traders still continue to bet on the first Fed cut to come in September. And if you look at the Edgefinder, I remember this happening in February. It was supposed to be 2.9, ended up being 3%. And if you look at what happened, short-term rally in the dollar, but ultimately we went ahead and sold off on the dollar February 5th. Why? Because the market cares for other things. How you doing, Nick?
What's up, man? Yeah, no, that's a great point. Keep going.
Yeah. So, the main catalyst is this whole trade deal, specifically with the US and China, right? Because those are two major economies that, even though them two are fighting, they really affect not just the two, but everyone. And so that's what the market is really caring for. So on February 5th, we got a higher than expected CPI print, yet the dollar continued to sell off, and that frustrated me. But it's always a good lesson to make sure what exactly the market is caring for. And, for back testing purposes, you can use the Edgefinder to kind of see how, previous CPI prints kind of go. Oh, shoot. How previous CPI prints went. And that's what I did pretty much this week. I went ahead and looked at what happened in the past. And I remembered, because I have this tool in front of me, and I was kind of expecting that the market may not really react too much for this one. Go ahead, Nick, while I fix this setup real quick.
Yeah, it is interesting just to think about, I was saying this earlier, it was like during like COVID, for example, it was all about who's shutting down, right? You had this really like nuanced thing that was guiding the markets. The market is fascinating in that way, where it really obsesses over one thing at a time. It's kind of like the 24-hour news cycle, where back in COVID, some of you guys may not have been trading during this time, but here's a glimpse to the past. It was like a constant monitoring of that old map. Remember that map where it was like, where has COVID, where have instances of COVID have been spreading, the old like map that they would always show up on the screen. Well, at the time, it was constantly monitoring, the markets were constantly monitoring like policies from governments and from businesses, and that map to see, is this thing worsening or is this thing improving? And also, what are the stances of governments? Because everybody knows, from a purely just a financial, economic, macro situation, if economies open back up sooner, it's going to be good for those economies. And if they stay closed or stay shut for longer, it is going to hurt those economies. That was the obsession at that time. Now we're living in an environment where it is constantly chasing Trump and what he's doing and what his, next trade deal or whatever is going to be. And it is just fascinating. I think, though, Alan, here's something I kind of take a bit of solace in, is like that narrative changes constantly. And it's really difficult to build a trading strategy around that. So I go back to kind of old reliable, which is the economic data and like where it lands, because that stuff is going to be very noisy. I can't predict when Trump is going to say something outlandish, or he's going to, have a disagreement, or he's going to agree and make a deal with somebody. Like, I can't predict that. But what I can do is I can look at the inflation data. I can look at GDP growth. I can look at PMIs. I can get a general sense of whatever we throw at the US economy or whatever we throw at the European economy. Can it stomach it? Can it handle it well, or can it not? And that's where I really kind of focus my my actual decision making. There are criticisms to that. You could point out that the market doesn't really care about those things at this time, so why are you paying attention to it? But that is what's worked for me over the years, is to really just kind of pay attention to the stuff that I can kind of track consistently and build a strategy around.
Yeah, and ultimately that's what the Fed looks at, right? So if we see some more better print in CPI, maybe in the short term, sure, the market may not react to how it's supposed to react, right? But if you kind of keep that in mind, right, and we have the tools for that, and you see that, numbers are looking better for the US, well, then that's when you can kind of say, like, right now where DXY is at the 1014, 1015, you can start to say, okay, 102 seems to be like a potential area of resistance. What happens if we break past that? Maybe 103. And then by then, when we get to those areas, you can kind of see like, okay, maybe the Fed has confidence, because we know that they look at CPI. We know that they look at growth. And then you can start looking for areas to kind of go ahead and flip positions, because we still haven't cut rates like everyone else has. So kind of little overview as to, what the market's looking at. I have the DXY pulled up. Let me go down to like a 1 hour just so we can see how it's reacting. Not really much, in my opinion, right? Earlier today, we were pretty much in this area. Looks like we got a flush down, but we're starting to retrace. Oh, I'm on the 5 minute. Did not mean to do that. If we do kind of close and fill this bearish candle with a positive bullish candle, then we could see a little bit more upside. Couple things about CPI and pretty much what the street is thinking when it comes to these prints is that although tariffs did hit, momentarily, and certain businesses were taking precautions to kind of go ahead and hedge against that, because of the 90-day tariff pause, a lot of businesses or a lot of industries really didn't get affected that much yet. So a lot of people are waiting for more prints to kind of see if those negative tariff uncertainties were actually implemented and businesses felt that. So that may be why also this print got a little bit of a kick to the side. But nonetheless, like Nick said, and like I agree on, a lower CPI print is a lower CPI print, and that's what the Fed's going to be looking for. So if we get more positive prints, then we can see, then we can start looking at the chart and say, okay, let's go ahead and look for some bearish setups on the DXY. Ultimately, that's probably going to be my move for like the second half of the year. I mean, you can see on Financial Juice, apparently, right, traders continue to bet on the first rate cut being at September. If you look at Fed Watch Tool, June is pretty much off the table at a 91% chance that we're going to hold rates. If you look at July, it's a 61% chance. So depending on new figures that come in, this could sway a little bit. If we start seeing that, we get like a bad print in jobs or growth, we could see that this is going to grow from 61 to higher. But this tends to fluctuate. So this is a good tool to kind of see and kind of time, I guess you could say, when it'll be time to start shorting the dollar. So I'll go over my positions. Any questions, guys, please send them my way. I love to answer them. H-ball out. Haven't really tracked FX for 2025. Yep. I used to track stock earning calls, but stop quickly. All right. So I'll go over my positions real quick. Euro dollar, selling euro dollar, looking for somewhere in this area. If we just take this fib from high to low, let me go to the daily chart here. Let me also get rid of this. Only future events. Cool. Then I will want to target, somewhere around the 50% retracement level. So this is my position on the euro dollar. Sold when we were in this range, when we failed to break above this resistance zone. We're making new lower highs. So I'm going to trail my stops with these lower highs. So if we kind of solidify, kind of flush down from here, I'll probably trail something like this. Dollar yen, a trade that I really liked. I have a good price on it, so that's why I stuck through it. Bought at this support zone here at the 140 handle. We tested it 1, 2, 3, ultimately 4 times. And now we have passed this level, so I'll probably look for trail stops. I didn't trail stops before this because CPI print could have had some volatility, and I tend to ignore the noise sometimes. So unless it's like a figure that's a very obvious, like, okay, this is going to invalidate the trade or the system, then I will go ahead and close manually. But this is my US dollar yen trade. Ultimately, I'm going to target the 150 handle to the 149 area here. This is the pre-sell-off to the April 2nd move. So whenever price was consolidating before April 2nd, when Trump announced his tariffs, it was a 10% baseline tariff. Actually, the dollar rallied on that. But whenever he said that it's going to be a 50% reciprocal to everyone, then everything sold off. So I'm pretty much targeting these levels here. We're pretty close. If we break above this level that I think is going to be resistance, then I'll just trail my stop right here. Dollar Swiss, good trade for me as well. We were in this range, broke, making new highs. This resistance level turned into support. I actually trailed my stop. If you guys reference my previous live streams or previous videos of mine, I was bought in here and I was trailing right below the support zone. I actually got wicked out of it on Fed Day on Wednesday. But when I kind of was listening to it, read the narrative, I kind of was like, okay, this is pretty hawkish here. So I re-entered. I'm up 200 pips on this one. This gap was a little bit concerning for me, but gaps don't always fill right away. Sometimes they continue. So I'm just being mindful of this zone. If we kind of get a good close, I'm looking to target ultimately 8,500 or 85.5 as a take profit for dollar Swiss here. Dollar Canadian. I might get out of this one prematurely. I didn't like how it was acting initially. It was just chopping. The correlations with oil weren't really working out really well. We stayed above in this channel here. If we kind of zoom out here, upward channel, we never broke below, which is why I stuck with it. But it's it kind of lags behind. So if we kind of hit this resistance zone early on, or even maybe somewhere right here, I'll just take it. I'm not really a fan of dollar Canadian, to be honest. But for the most part, my view is going to be dollar bullishness until we get some signs that the Fed is more confident, or more prints that the Fed is more confident to go ahead and cut rates. And then I will go ahead and start, flipping positions, taking profits, and looking for price action that kind of confirms a good risk to reward setup. But with that, guys, those are my current positions here. Dollar, let's look at dollar, what it's doing post release. Just hanging out there still in this area. Yeah, I'm interested to see if we start seeing some flush downs, then I'll just probably just get out of my trades and just wait. Honestly, that's probably what I'll do. So if we start breaking and start flushing and start filling this pocket, then yeah, I'll just take my profits and hang out and wait for another setup somewhere else.
I'm actually a little bit in a bad mood. Not really, but I'm a little bit salty. So I put out a video on Sunday, as I always do, just going over my watch list and what I think the markets could be doing. I wake up Monday morning and it's all pretty much there. Euro dollar sank, dollar Swiss is up, oil's up, euro pound's down, pound dollar's down, New Zealand dollar's down. So missed all of it, as you know, of course, typical. But that's just trading sometimes, you know. I'm not normally, you know, you could argue, oh, well, should have been up for market open. I don't, even if I was awake for market open, there's no way I'm going to place a trade as soon as they open after the weekend, especially after they gapped. And then by the time it was Monday morning, they'd already moved too much for me to get in. So now it's just a waiting game. A lot of the markets are actually showing gaps at the moment. Like here on euro dollar, we've got the gap. On gold, we've got a gap here as well. So now I'm just waiting for these gaps to get filled. And then I'll be looking to actually get into these trades. I still love the idea of dollar bullishness. I haven't seen anything to really change that at the moment. So yeah, we'll see if that can ride into something. Rennis, I do agree. I think we could definitely see gold come down now. I think it's a lot of the steam that was driving gold to the upside is pretty much over. I mean, tariffs seem to be doing okay in terms of developments. There's no rise in geopolitical things in terms of Middle East, Russia, Ukraine, Pakistan and India seem to have you know, that was like a blip. It's not really done anything. So yeah, I mean, Fed's holding rates as well. So that, yeah, no reason really to be a bull on gold in my view right now. Quang, I just saw your message. I'm on the schedule now. Ball out, hello, good to see you. OT, hello. Pound dollar pullback. Yeah, I would expect so. Just like euro dollar, I would expect a lot of this left side to get corrected. Same thing, yeah, on pound dollar here. I think the pound is slightly more supported than the euro right now in a central bank terms, but I do think it will follow euro dollar down, but it might just be a lagger. I think euro dollar will be the one to sort of lead the way in dollar crosses to come down. I'm telling you, on a 6-figure plus account, that's like almost guaranteed returns with defined risk. That's like the next go-to master in trading. Oh, spread chain, like okay, I see what you're saying. Yeah, I don't trade that far. I'm not a super intelligent guy. I look at the basics and make money from that. James, what do you mean I place trades a second after market opens? Yeah, great. I used to do that. I used to set pending orders on a Sunday night as soon as the market opened. I only did this for a couple of weeks and it was awful. Rather than, I had an idea, and this was back when I was doing freelance work and contracting and things, so I wasn't at the charts all the time like I am now. So if the market's opened, I would set a buy or sell limit or an order, whatever type it may be, and then I would just not check the charts for the next week. And yeah, that in theory sounds great because you've got no emotional input, your orders are set, so the entry criteria is solid, but it, in reality did not work at all. Lee, hello. How are you doing? I'm looking to re-enter oil. Do you have any idea on pullbacks? Not really. I think the markets are still kind of settling. We've still got a lot of the momentum that we started the week with. So yeah, I think yeah, no entry right now. I had a very similar idea to Nick, actually. I think it was Friday, actually, I think Nick and I had a very, very similar idea on oil. Although I don't think I was on stream, actually, I'm not sure, can't remember. But I know he was looking to buy oil on this pullback, and I was as well. But I just didn't get a deep enough retracement. And then obviously I don't trade late Friday anyway, so didn't catch anything. Then market opened and missed the whole thing. So that's sad. But in terms of re-entry or another entry, yeah, no idea, to be honest. Would really assess it at the time because I don't really have an entry criteria with the market at the moment. So we just had this small pullback, so it kind of invalidates me drawing a fib from low to high because this is now the new low. So yeah, tricky. OPEC report, yes. I don't trade oil that much, so things like that, like OPEC report, to be honest, wasn't even in my mind. So yeah, that's another reason I'm not too invested in taking trades on things like oil, platinum, and other commodities that I just don't really pay attention to. I disagree with you, James. The EU gets lower than the buys are better, and S&D is better. But why? I don't see any reason to buy euro dollar. Do you get the feels when you think about unicorn knees and toe breaker gaps? I have no idea what you're talking about, Sean. Lay off the LSD. What's your plan on dollar Swiss? Well, it kind of is the same as what I've already got drawn up here. Let me just do a quick checkup. Yeah, so it's here. I'm just cautious of this weekly low being used as a new resistance. Fundamentally, I am bullish, yes, but this is a strong weekly level. We've seen a bit of selling pressure come in here. So to be honest, I think I would take a first entry probably on this gap fill, as I've already said, so back where my initial entry was, because this would also provide a really nice break and retest. So obviously we've already broken, have a retest down here, enter long, and potentially come back. We've still got a lot of left side here to possibly correct. We've got, let's just see, what is that? So yeah, almost 6.5–7% that we could still come up on dollar Swiss in the short term. So we'll see.
Just taking a look at the CPI data this morning, all came out at 8:30 a.m. Eastern time. Just the summary here, core CPI came in a little bit better than forecast, slightly higher than previous. Core CPI all remain the same as previous, same as forecast, 2.8%. That's core CPI. Year-over-year CPI, which is what I was watching, previous was 2.4, forecast of 2.4, came in 2.3. Kind of same thing. I mean, what is tended to be the lagging inflation data has been shelter, that's been coming down. We obviously broke a floor on oil around $62. So with oil less than 62, shelter coming down, all the lagging data kind of catching up to current, like the trend has been lower. We've been spot checking the Trueflation, which is third party, and inflation index on this is showing lower levels. So let's go max. Nope. 3 year. Nope. 6 month. So just since December, I mean, pretty big improvement. Inflation index is up around 3%, dropped quite a bit. We have seen, several prints now in a row to the downside. If you go to your Edge Finder, look at your CPI prints, we should continue to see some trends in the right direction. So here's your inflation data, looking at year over year. So histogram is, it was sticky since summer of 2023, but I'll just draw a straight line over. So straight line over this way. Outside of that little elevation into November, December, we have been trending 1, 2, 3, 4. 4 prints lower. So that is a good thing. Is it still, close to that 2% inflation target? No. The bond market is not pricing in lower inflation. If it was, we wouldn't see 10-year yields rallying, which they are higher today. We look at the 2-year yields, flat, but still on the last 3 days of trading, 2-year yields are up, 10-year yields are up. That's 1, 2, 3, 4 days with higher highs. 20-year yield. This will be something to watch here in the next couple of days, simply because this is where we had the Liberation Day kind of bond market breaking, or flinching rather. And so when we saw the basis trade blow up from, this went from 4.4 to over 5% in 2 trading days? Yeah, so 3 trading days, 1, 2, 3. In 3 days, we saw a jump of 60 basis points or more. I wonder if we start to see something else happening here around that 5% level. I mean, it doesn't have to be, but this is the biggest pressure point for the current administration and the Fed is how on earth are we going to service debt at higher yields? How are consumers going to feel anything as far as improvements go? Look, the Fed can cut rates in 2025, and you and I as consumers will never feel the benefit of that. That's kind of what last year felt like, right? Rates were lowered by 100 basis points and yields went up by 100 basis points. You want to buy a car? It's actually more expensive. You want to buy a house? It's actually more expensive because prices have gone up and yields and borrowing have gone up. So the cost to borrow is higher. I know this may not be like a major concern right now, like today, but I have to imagine in the next 12 months, like this has to be a pain point in the market. This is going to choke out growth if you can't refinance debt, because the reality is, the world doesn't pay back debt; it refinances debt, right? You keep the cash flowing in, you keep the runway going, and I just wonder, the Fed might lower rates and be able to lower the service of their debt, but that's the Fed, not everybody else. Consumers have to borrow based on what the yields are giving us, and the yields are not going down. So anyway, markets are up today. We didn't really have, aggressive price action like we did yesterday. We just had a huge gap yesterday. Prices were actually quite quiet. This was yesterday's trading day, so we had a huge gap up, and then price action was relatively calm. We're getting more of a directional push today. But I'm watching. I've got some 5,900 levels. I just turned a little butterfly spread and some profit this morning. So hitting, if we hit 5,900, I hope that we actually have a little rejection off of 59. I want to see if my SPX trades can get back below 50 at 80 and come back into this range. This would be hopefully a nice little win on SPX today. So I'll ride that out a little bit longer. Yeah, we'll see. So I'm going to watch that closely. Let's go back. Actually, go back here to SPX. Let's go currency strength chart on the day. So we've got Aussie on top, New Zealand on top. We've got dollar CAD weakest, Swiss euro, pound, Japanese yen stuck in the middle. Not a ton of volatility in the currency market today, but Aussie, New Zealand coming out with some risk appetite.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.